Well, the big story today is the ITC Demerger and the dichotomy of FDIs rising, but FPIs, well, not so much. Joining me on the show today will be Andrew Holland and Akshay Bhagwat. You're watching Morning Brief at 9. This is Morning Brief at 9 on News9 Live. A quick look at all the headlines making news today. Commerce Minister Piyush Goyal says India is growing as an FDI destination. 2024 saw a 42% increase in foreign direct investments, totaling over $42 billion. But foreign portfolio investment inflows dropped sharply on a combination of global and domestic factors. Rupee continues to remain stressed against a strong dollar. Reserve Bank's dollar selling spree continues, leaving its forex cash at a low of just $640 billion. Electric vehicle sales jump in calendar year 2024 by 27% on low base effect, but miss the 2 million mark. Will 2025 be the year of EVs? We'll find out. Was the lab-grown diamond that Prime Minister Modi gifted US First Lady Jill Biden indeed the most expensive gift? Ministry of External Affairs clarifies the real cost. Agriculture Minister Shivraj Singh Chauhan meets State Minister, says agri sector likely to grow 3.5% to 4% this year. 7 new IPOs on the block this week with 6 new listings. Which of these should be on your radar? Meanwhile, Oyo Rooms has changed its check-in policy. Only married couples to be allowed entry. And the big story today, ITC Hotels Demerger is today, Jan 6th, as the record date. Shareholders to receive 1 ITC Hotels share for every 10 ITC shares they hold. Let's start with the big story today. After a long-drawn process, Jan 6th today marks the record date for ITC Hotels Demerger. This was announced in July 2023, and the restructuring will see ITC retain a 40% stake in its hotel business, with the remaining 60% directly held by shareholders through a rights entitlement. Shareholders will receive 1 ITC Hotels share for every 10 ITC shares that they own as of Friday, Jan the 3rd. Joining me on the show today is Andrew Holland. Andrew Holland, welcome back to News9 Live. Happy New Year to you. Good to have you back. Help us understand ITC Demerger in the making for a long time. Finally, 2025 is upon us. Today, Jan 6th is the record date for the demerger. What does this mean for ITC?
So good morning, and I wish you and the team and all the viewers a very happy New Year, a very prosperous New Year. I think rather than I think this has been known for a long time, about the demerger. So I don't think there's anything new there to my mind. But what I find interesting is that in the years gone by, or many years now, when you look at the results of ITC, the hotel part of the business has always been so small. It didn't really you didn't really focus your attention towards it. So now I think with this demerger and listing, maybe a more focus now can be on the hotel side of the business, and of course, it will be good for the cash flow of ITC as an overall holding company, to continue to build on its kind of retail and food and beverage businesses. So, I think it focuses attention now on two sides of ITC in terms of the hotel standalone, which is great news. And of course, we like that sector. It's something we talked about many times that we like the hospitality. We think people are going to continue to travel and want experiences. And having stayed in many ITC hotels, they're one of the leaders in the country. So I think this is a good news in terms of for both sets of the companies, ITC and the hotel business.
And Andrew, what does this mean for shareholders that own ITC in their portfolio at present? I believe for every 10 shares that they hold, they will be allotted one ITC Hotels share. So in the medium to long term, what does this mean for shareholders of ITC?
Well, it means you've got two, you're holding a new business which is separated out in terms of the hotel business. And as I said, the prospects for the industry overall, look very, very strong in terms of people continuing to travel, and the good news in terms of what could be extra revenue for these hotel businesses is that foreign travelers have yet to kind of pick up in terms of travel to India. It's still pre-COVID levels. So if that was to happen, and that's one of the focuses of the government too, then this would be, would help both the top line, but more importantly, the bottom line. So I think, the next 2 to 3 years for the industry is very strong. So, as a holder of a hotel company, whether it's ITC hotels or whatever, I would think that this is a good growth story to be holding on to.
Right, a good growth story, especially for the next 2 years or so. Hold on is the word coming in from Andrew Holland. Andrew, let's move on to another story. And this comes by way of FDI inflows into India. Well, foreign direct investment inflows into India are witnessing a major surge, with investors from the Middle East, Japan, European Union and the US recognizing India as a prime investment destination. Well, this according to Commerce and Industry Minister Piyush Goyal, who says that this growth is driving rapid economic expansion and generating millions of jobs. Well, just look at some data. According to the minister, India is averaging over $4.5 billion in monthly FDI investment inflows since Jan last year, despite global uncertainties and challenges. In the Jan to September 2024 period, FDI rose by about 42% to $42.13 billion against less than $30 billion in 2023. Andrew, FDI inflow into India, this is something that the government has been pushing for, has been wanting, and the numbers for 2024 looking fairly robust, especially as compared to the year ago period. What really is working for India? And with the onset of budget in less than a month from now, what should India do to further strengthen FDI inflows coming in?
Yeah, I think, the reason there's many reasons for FDI inflow. I mean, the kind of China plus one or India standing out because of, security of products or services has helped India. But I think, the one thing that, we kind of, I think we should really focus on is two things. One is that, India is growing at one of the fastest rates of globally, and therefore, with the young population, the consumption growth in India is going to continue to grow many folds over the next 5 to 10 years compared to any one country. So if you just think about, I'm going to invest in India, because of the demographic, dividend that we do have, and also, per capita GDP moving from 2,500, say, to 10,000 over the next 3 to 5 years, there's an explosion of spending that's going to happen. So you get the benefits of being in India. And then for some companies, if you go to, let's say, semiconductors or electronic manufacturing, you have the domestic market as well as the export market to look forward to going forward. So if I was at any company in the world, I'm sure the boardroom, members would be saying, listen, we're just seeing Hyundai Motors list on the Indian market, and it's a large percentage of the holding company's own listing in Korea. And therefore, it's not just the potential of earning money within India. If you want to get a listing going forward, and that would help your own market capitalization in your country as well if you were listed. So many ways to kind of put the positive here. But yes, I think foreign direct investment is something India definitely needs. And if it continues at this pace, then that's great for not just the economy, but jobs as well. and it has a multiplier effect across many different industries. So that would be something that you would want to continue to see rising.
Right. Of course, as we want to see FDI rising, there is a dichotomy that you see in FPIs, Andrew. Foreign portfolio investors have pulled out close to 4,285 crore rupees from Indian equities in just the first 3 trading days in the month of Jan this year. And this is reflecting a cautionary stance ahead of the Q3 earnings and concerns over valuations. Now, this FPI story marks a sharp contrast to the net inflow of 15,446 crore rupees seen in December 2023. Now, add to this the US Fed Reserve's decision to reduce rate cuts in 2024 has further failed to improve investor outlook. So, Andrew, there is this dichotomy, FDI story really shining, money directly coming into Indian businesses, but the FPI seem to be a little cautious and a little jittery. How do you explain this dichotomy?
Well, I think foreign direct investment is really building a business, over the longer term to capture the economic growth of India. For foreign investors, portfolio investors, there's other markets they can look at. It's not just India in terms of the short to the longer term as well. So what I think is happening at the moment is that, if you're an emerging market investor, you're probably just going to sit on your hands for at least another, 14, 15 days, let President-elect Trump come into office and see what those policies would be and how it would affect the region overall, particularly China, where the tariff expectations are running quite high. Now, if it's any less than that, that could be good for emerging markets. But I think most foreign investors say, we'll just sit on the sidelines, wait to see what happens, see how this policy plays out. Is it going to be exactly as the market is expecting, or could it be different? So I think, that's where we are globally. I think locally, yes, you're right. We've got results season coming, and I think TCS is the first one of the big IT companies on the 9th of January. And they're after the budget. So you've got a few positives that could play out locally as well. But all eyes is on the US, because if it's bad news in terms of tariffs, then that narrative around America first, only buy America, bond yields there at 4.6, you might as well be there, right? You don't need to take any risk elsewhere in the world. So I think unless that narrative changes, then emerging markets, particularly given the dollar strength, are going to remain under pressure. And that's probably why you're seeing foreign investors, continue to be lukewarm, not towards just India, but I think, globally in terms of emerging markets.
Right. So is it fair to assume, like you mentioned, this could very well just be a temporary blip, just caution being exercised by foreign investors, and they're waiting for Trump to actually take office and get on with whatever decision he has to take on tariffs, and that will decide and define the future course of FPI inflows, not just in India, but in all emerging markets, Andrew?
Yeah, I mean, let's give an example, and this is why it's fraught with kind of danger in saying this is exactly what's going to happen. But let's just say the tariffs in China were at a 30%, not 50%. This could be seen very positively, in a China context. So therefore, flows towards China through emerging markets would start to increase, and India would gather some of that because of its own weightage. But it would take that relief away from emerging markets in terms of the possible high tariffs that were there. And if China was then to do a stimulus, to kind of go along with that, then the whole region could be in favor. Now, I said, China and other markets are quite a lot cheaper than India in terms of valuation. So, India might, garner some of that, but the sentiment would change. And I think that's the key, is the sentiment towards emerging markets would change for the better, in terms of, that things aren't going to be as bad as initially everyone's thinking at the moment.
Right. Well, you had mentioned previously, Andrew, about the strong dollar, and I want to now shift focus to the RBI's constant endeavor to keep the rupee from sliding, and despite that, the rupee continues to slide. In fact, the forex cash available at the RBI has now dipped to an 8-month low of just $640 billion as of December 27th. Now, this again is as per the data from the RBI, and the reserve saw a decrease of $4 billion during the week, following a cumulative decline of about $13.7 billion over 3 weeks. Now, is the RBI right in selling dollars and intervening in forex operations to really try and keep the rupee stable, or should the rupee find its real value no matter how much it intends to slide down by?
Yeah, it's a tricky one to answer actually, because I think all central banks would like to see a stable currency. Some mild depreciation is fine, but nothing too untoward or has anyone panicking, and I think that's the case here. So I have nothing against what the RBI is doing. I think they've, over the years, I think you've seen that currency depreciation. Whilst you have some sharp moves in some years, I think the depreciation on average has been something like 3-4% over the last 10-15 years. So it's not a sharp move upwards or downwards that you're seeing with the rupee, apart from occasional years. So I think just keeping that stability, I think, gives investors confidence that they're not going to be hit by a currency depreciation. But of course, one of the things we talked about just previously was that if you expect currencies, and not just India's, but emerging market currencies, to depreciate, that obviously means that you're going to lose money as well as a foreign investor. So again, it all stems back to what will Trump's policies be, and how will that affect emerging markets and currencies. So one of the things that we're just focusing on at the moment, to try and give us a clue of what these policies might be, were bond yields in the US and currencies in terms of how's the dollar performing. And at the moment it's near 109, so that's telling you that it's still America first is where people are putting their bets at the moment.
All right, so what I'm hearing all the last 15 minutes or so, Andrew, is that all eyes are on Donald Trump, and that is pretty much going to define the future of practically everything, from the strengthening of the dollar to FPIs coming into emerging markets, including India and China. And one more aspect of the Donald Trump presidency is going to be the influence of Elon Musk, who, among other businesses, also happens to own Tesla. And how this tariff war is going to play out for the electric vehicle industry in the world is another story that we will be waiting and watching and looking out for in the coming weeks and months. But staying with the electric vehicle story, Andrew, I want to bring some data up on the screen, and this is about the India EV industry, which has now finally achieved its best ever annual retail sales in the last year, CY 2024, registering a total of just short of 2 million electric vehicles sold. In fact, 1.95 million electric vehicles were sold, registering a growth of almost 27% year on year. Now, this EV story is something which has again been something which the government has focused on, Andrew, all year long. In fact, for the last many years now, the push has been to somehow achieve that 30% of electric vehicles by the year 2030. But we haven't really seen this take off, and despite the 27% rise year on year, we are talking about a low base effect, and we are still nowhere close to the 2 million milestone when it comes to EV sales. So what do you make of the year ahead 2025 with respect to electric vehicles? Is that something which is on your radar? And again, is there going to be Trumponomics and Elon Musk which will again decide whether the world will move to EVs or not?
See, I think EVs, not just in India, I think EVs globally have, apart from China, actually, have been, suffering. Particularly in Europe, it's been a slowing in terms of the progress has been slowing. I think in India, that the way I think about the overall kind of market, including EVs, is that it's hugely competitive and it's pretty cutthroat at the moment. So I'm not sure which one is going to be the winner. I mean, in terms of the one that kind of is it a Maruti which has huge market share in the future, or is the leadership going to change over time? So the way I would look to play it is probably through the component makers, because they will be supplying all of these car makers. So I'm not saying I'm skeptical. I just think it's a hugely competitive market, and I think this will keep margins under pressure for some time until you, as you rightly say, see this kind of real big push towards growth of EVs. And I think it's going to take some time, to be honest.
All right. Well, we'll leave it at that. Andrew Holland, thank you so much for taking time out this Monday morning and joining us right here on Morning Brief at 9. Pleasure having you with us.
Thank you. My pleasure too. Thank you.
Well, let's move on now. A 7.5 carat diamond had sparked international debate after US authorities valued it at $20,000 following its presentation to First Lady Jill Biden by India's Prime Minister Narendra Modi during his 2023 visit. However, India's Ministry of External Affairs suggested that the gem's actual worth is far lower, estimating it at under 2 lakh rupees because it was lab-grown. While lab-grown diamonds cost around 15,000 to 25,000 per carat, the US valuation was based on the price of natural diamonds. Now, along with the diamond, Prime Minister Modi also gifted other items valued at approximately just $6,200 or so. Moving on now, Oyo Rooms, the Indian hospitality chain, has introduced a new check-in policy for its partner hotels. The policy, effective from this year, will disallow unmarried couples to check in to a Oyo hotel this year. The policy will be effective immediately, starting in the city of Meerut. Now, under the updated guidelines, couples will now be required to provide valid proof of their relationship while checking in, including for bookings made online. Now, Oyo has granted its partner hotels the discretion to decline bookings from couples based on their judgment in accordance with local social norms. Now, Oyo has instructed its partner hotels in Meerut specifically to implement this policy immediately. Depending on the feedback from this particular change, the company may extend it to other cities as well. Oyo says that changes are based on the feedback it received in the past from civil society groups, especially in the city of Meerut, urging action to address the issue. Additionally, residents from few other cities have petitioned for disallowing unmarried couples, to check in at Oyo hotels. Well, time for a break now, but on the other side, stocks which are in news and whether they should be on your trading radar. Joining me on the show will be Akshay Bhagwat. Stay tuned to Morning Brief at 9.
XEV9e, Mahindra Electric Origin SUVs.
The section is called The Bit of the Empire Striking Back. It is not me who said it, it's Mr. Tata who said it. And normally you don't expect him to say that because he's very polite, he's very understated. But at a weak moment in the speech in Cornell, he said India's acquisition abroad made by Tata Group is kind of the empire striking back. Please understand, Mr. Ratan Tata is a very, very patriotic man. Extremely nationalist. He had the nation's interest first and everything else second.
This and more. Streaming on News9 plus news is now content. Subscribe and get free vouchers.
Welcome back. You're watching Morning Brief at 9. The stock markets have opened with a gap up opening this morning. Let's take a look at the mood of the markets as they opened. Well, the Sensex and Nifty are both in the green, just slightly in the green, up just about 0.1% or so. The broader markets are pretty much flat. No change in momentum from what we saw on Friday. Let's look at the Nifty heat map and see how India's top 50 companies, the largest 50 companies, are performing this morning. Let's bring up the heat map and take a look at which are the sectors. Oh, well, it seems like a mix of green and red this morning. The HDFC Bank, ICICI Bank, banking sector and the IT sector positively opening this morning. ITC, which is the big story that we will be talking about, is down about 1.52%. Remember, today is the date of the ITC Demerger and the operations for that will kickstart. Joining me to understand the mood of the market today is Akshay Bhagwat. Akshay, good morning. What's the mood of the market this Monday morning?
Good morning. If you look at the start, it's a pretty muted start for the index. And the positive development as per the Nifty index is that last week we had a strong bout of momentum on the weekly expiry day for the Nifty index, where we broke past the resistance zone of 23,950. So that's an important level to watch out if you are a day trader, because till the index stays above 23,950, the view stays positive for short-term trading, which in case may result in Nifty seeing the upside resistance zones of 24,250 to 24,300. So short term still positive till 23,950 holds. Expect momentum to stay in stocks which have been beaten down, like a Reliance or a Tata Motors or a Hero MotoCorp. These stocks should see momentum. IT sector is the best sector to bet on from a trading perspective, considering the Q1 results, which will be start soon.
Of course, action on the Q3 results is something that we will be waiting and watching for. But Akshay, I want to start off with ITC, which has announced that today, Jan 6th, is the record date for its hotel business demerger with the parent. Now, the news suggests that every 10 shares of ITC will fetch investors 1 share of the newly demerged entity. ITC shares, what is the outlook and how do you view this development of the demerger finally going through, Akshay?
Yeah. So the demerger is a positive development if you are a holder of ITC shares in the cash market. But if you are looking at the stock from a short-term perspective, especially for one who is keen on the futures and options segment, I believe I don't see much of an upside if you are a short-term trader with a time horizon of a week or so. Because of the corporate action, we might see some bit of a slowdown in terms of the price action, which in case the prices might see downside till 470 75 odd level. So that's a temporary downside which I see. Otherwise, from a long-term perspective, it's the demerger is really good news for those holding who held ITC shares. And if you were to look at ITC single stock per se, then I believe the price structure is strong. 460 somewhere is the support which has been chalked out in the last few days, and eventually the stock should see higher levels of 500 plus in the days to come.
Okay, but what happens to the share price of ITC post the demerger when the hotel business is taken away? Are we going to see a reduction in the share price of ITC in the days ahead?
Yes. See, I don't think it's going to matter much, because 1:10 is the ratio for the demerger. So that's how it works out. And I don't think, yes, post the corporate action, the ITC shares should open lower, because I believe today is the day where by the end of the day, the opening tomorrow might see ITC on the lower end, but that is because of corporate action, and those who are entitled to receive ITC hotels will have those shares credited to their demat account. So it's more of a corporate action. It doesn't result in loss of value to any investor. Yes, per se, if you're an options or a futures trader, then your contract is already expired in the prior trading session, that's on 3rd, and new contracts of ITC would be opening on the 6th. So the first hour would be for price discovery, where your new lot sizes, your new lots, your new strikes for options will be determined for futures and options. New contracts would start for the next 3 months. So it's a new game entirely if you are a futures and options trader. But for long-term investors, I believe the value continues to hold in ITC as it stands right now.
All right, no loss in value for ITC is the word coming in from Akshay. Akshay, let's shift focus to HDFC Bank, which has reported a 3% rise in gross advances and almost a 16% or 15.8% increase in deposits for the December ended quarter. On your charts, is HDFC Bank a bet that you would expect investors to take today?
The numbers which you just mentioned are positive, but if you look at the reaction post-opening for HDFC Bank, it's a lukewarm reaction to the numbers. And on the price charts, an important development on Friday's trading was that an important short-term support level of 1772 was breached. So that's a slight negative development if you are an intraday trader or if you have a short-term vision for the stock to buy for some trading gains in the futures and options segment. The short-term momentum has been lost with the breakdown which we saw in the prior trading session. This might see the stock slightly correcting till the levels of 1700 or 1690. So that's more of a short-term trading perspective. A slight dip of 30-40 points cannot be ruled out. So if you want to buy HDFC Bank, I would suggest wait for those dips and then we will review it at those support levels.
Right, wait for dips on HDFC Bank. Let's stay with the finance sector and move on to Bajaj Finance. Bajaj Finance has reported a year-on-year 28% rise in assets under management for the October to December quarter. AUM for Bajaj Finance now stands at almost 4 lakh crore rupees. What is the outlook on Bajaj Finance, Akshay?
Well, this stock has surprised many with the kind of start this stock has taken for the year 2025. An absolutely rocking start. We did see very strong price momentum a couple of days back from the levels of 7,000 to 7,400 in just a matter of a single day. And if you were to pull up the longer term charts of Bajaj Finance, I believe right from the year 2022, this stock has been kind of facing resilience time and again at the levels of 8,000 and a support somewhere around 6,900. So it's been more of a broader range bound journey. But if you look at the charts from a longer term perspective, something big is cooking up in this stock, and this stock is heading for a major breakout which stands above the levels of 8,000. So expect breakout of 8,000 in the days to come, where you will see a strong bout of momentum, and I won't be surprised if this stock moves up near the levels of 9,500 plus from a long term perspective. So this is a share which you should consider having it in your portfolio. Breakout traders can time it or preempt it. 8,000 is breakout is in the making, and 9,500 plus targets, or rather 10,000, is what you can expect soon in Bajaj Finance.
Timelines for that, Akshay? You're saying 8,000 as the breakout and stock going up to 10,000. What timeline should investors really look at?
So if you are a momentum trader, right now, as I see, 7,800 is possible in the next month itself. And if you're really looking for a very long-term 10,000 kind of target, I think you should give minimum 1 year of time for this stock to test those target. If you look at the charts, as I mentioned, it's been 4 long years where the stock has been consolidating. So whenever this breakout, if it happens by February or so, 8,000 levels are breached, then it won't take more than 6 to 8 months to reach levels of 10,000, because it's been for 4 long years of consolidation. And whenever a stock breaks out of such a long consolidation, expect targets to move at a very rapid pace.
All right, let's shift focus now to Adani Wilmar. Its revenue for the December ended quarter grew 33% on the back of just a 6% jump in volumes. Many would attribute that to inflation, especially in cooking oil. But Adani Wilmar on your radar today, Akshay, what does one do with that stock?
Well, honestly, from a short-term trading perspective, I do not see any trading opportunities because of the choppy nature of the stock. So really, if you kind of plan to hold the stock, really you need to give a lot of time. Minimum 3 months plus is the time horizon you should consider, because the stock has been finding some kind of support at the levels of 280 to 85 odd zone, and there has been a tendency of a slight rebound till the levels of 400 from these support which I mentioned. I wouldn't recommend buying fresh. If someone is holding, keep a stop loss below the supports I mentioned and take an exit on a bounce back near 400. So that's the trade which is pretty evident. I would be more keen on other stocks in the Adani group, like an Adani Ports or an Adani Enterprise, if one wants to kind of take a punt on the Adani group. So those are better placed on the price charts than Adani Wilmar.
All right, other Adani stocks, not Wilmar particularly. Well, let's move on to HUL now. The FMCG major is in talks to acquire the direct-to-customer skincare startup called Minimalist for 3,000 crore rupees. Is this something which is likely to have any impact on the stock? 3,000 crore rupees for HUL, not really, not pocket change, but not a big deal as well.
The stock is trying to find its support or trying to find a temporary short-term bottom, because if you look at the entire consumer durables or the FMCG pack, they have taken a beating in the last couple of months. Some respite has been seen in many of the names in the last few trading sessions, and with the budget round the corner, there will be talks of consumer spending and consumer stocks should be in the limelight as we near the budget day. So HUL is one such stock which might see some bit of a respite or a bounce back from the levels of 2320, where it is kind of build a short-term support. Recovery attempt can see the stock heading for 2500, but as of now it's more of a recovery attempt. So the view is not to go for any positional or long-term buying. 2500 is the point where you can consider an exit, and might as well consider other stocks from the FMCG pack like an ITC or a Tata Consumer or a Dabur, which has more potential in terms of price growth over a longer term horizon.
All right, so let us talk about Dabur since you mentioned that. Well, HUL's competitor Dabur is expecting revenue growth of just low single digits for the December quarter. What should one do with Dabur?
So, if you look at the charts of Dabur, the longer term charts has one key feature that time and again there has been some demand emerging at the levels of 500 to 490 zone. So that level has held strong since 2022, and once again we are nearing those key support zones, and looking at the historical price pattern, there is a tendency that this stock will try to kind of revert or kind of stage a bounce back once it hits the support zone. So this is more from a slightly longer term perspective. Minimum 3-month plus view is what you need to have if you plan to take a view or a buy view on this stock. It is not for short term trading. My sense is it should take a rebound again from levels of 490 to 500, which in case if it does, then 540, 570 may be the targets in the making. But again, have time, have patience. Minimum 3-month plus horizon is what I look forward to if these targets are to be hit.
All right, 3-month horizon for the share to be in the vicinity of 540 to 570. The last stock that we have, which is in the news today, is NTPC Renewable Energy Limited, which is actually a wholly owned subsidiary of NTPC Green Energy, and it has emerged as a successful bidder in the e-reverse auction conducted by the UP Power Corporation Limited. The tender was aimed at selection of solar power developers for setting up a 2000 megawatt ISTS connected solar PV project in India under the tariff-based competitive bidding. This was conducted on Friday, the 3rd of Jan. NTPC Green, a stock which should be on investors' radar for the medium to long term?
Definitely, the green energy theme is catching up well. And it's a more of a futuristic theme, but many market gurus have already started kind of punting big on this theme. If you have a longer term vision on this particular sector or the stock, I believe this is the best sector to be invested in. Obviously, when we speak long term, minimum we are speaking about 2 years plus of time horizon. This is more of a new listing. So on technical price charts, the kind of data available to me, I would not do more justice commenting on this in terms of its long-term targets, but definitely green energy theme is the theme one should be looking out for. That's the space one should be invested in, because there is a good scope that it will give better returns over the days to come.
Right, Akshay Bhagwat, Senior VP at JM Financial. Thank you so much for taking time out on this Monday morning and joining us here on Morning Brief at 9. Well, before we close this segment, the IPO market has kicked off the new year with 7 offerings lined up for this week. Furthermore, 6 companies are preparing to enter the market, having either completed their IPOs last week or expected to finish in the next few days. Experts forecast 2025 to be a significant period for primary markets, with fundraising through IPOs to surpass 2 lakh crore rupees. Currently, approximately 100 companies have submitted their draft offering letters to the Security Exchange Board of India, with many either having received approval or waiting in the wings. Among IPOs which will remain open for subscription this week are: number 1, Standard Glass Lining IPO set to open for subscription from today, Jan 6th, and will close on Jan 8th. The IPO has a total size of 410.05 crore rupees. Price band has been set between 133 to 140 rupees a piece. Next up is Quadrant Future Tech IPO. The IPO will be open for subscription from tomorrow, Jan 7th, until Jan 9th. It will book build issue worth 290 crore rupees with a price band of 275 to 290 rupees per share. Then there's Capital Infra Trust, which will open for subscription on Jan 7th and will remain open until Jan 9th. Among other IPOs are also Indo-Bell Insulation IPO, BR Goyal IPO, Delta Autocorp IPO, and Avax Apparels and Ornaments Limited. Well, time for a quick break now, but before we head into a break, let's take a look at all the global headlines making news today. HMPV cases are on the rise in China, with reports showing 45% increase in infection from 2023 to 24. Malaysia also sees major rise in human metapneumovirus cases. Indian Health Ministry convenes meetings to take stock of the rising caseload. Meanwhile, Greenland's Prime Minister Mute Egde calls for full independence from Denmark, citing inequality in partnership. US judge orders Donald Trump to be sentenced on Jan 10th for the hush money conviction, denying motion to dismiss the case. New Orleans begins to recover after tragic New Year's Day truck attack as community unites and prepares for major events. US cities heighten security after the deadly New Orleans truck attack and Las Vegas explosion ahead of major public events and the anniversary of the Capitol attack. US stocks rebound in broad rally led by Tesla and Nvidia, but weekly losses persist as volatility looms ahead. Markets brace for signs of US economic stability and China's tough start to 2025 as inflation expectations and global trade tensions shape the financial outlook. And last week, US President Joe Biden blocked Nippon Steel's $14.9 billion bid for US Steel, citing national security concerns and union opposition. Meanwhile, Rivian shares jump 20% as deliveries exceed expectations and production constraints ease. All these stories on the other side of the break. You're watching Morning Brief at 9.
B6 Mahindra Electric Origin SUVs.
India spends $75 billion on foreign cargo vessels.
$75 billion per annum. That's a lot of money.
Imagine a situation where 95% of our cargo is coming on ships which are not owned by us. If we are still not prepared, if someone were to say that we are not going to give you ships, then we'll be stuck. So the entire nation's economy is at risk.
we are very clear that shipping is also strategic, because without that you can't really be the third largest economy in the world.
This and more. Streaming on News9 plus news is now content. Subscribe and get free vouchers.
It's not the fiefdom of politicians. They owe it to the people. Matter is now more about faith of the millions of devotees than just political slugfest. Does that mean that I can't get a job in Chennai, although I may be best suited for that particular job? They have more civic sense, they have more of civility than all these men.
My name is Sudha Sadanand. Welcome to the South Indian.
Welcome back. You're watching Morning Brief at 9 in a big update. The first case of human metapneumovirus or HMPV virus has been detected in Bengaluru, where an 8-month-old baby was detected with the virus in the Baptist Hospital of the city. The rapid spread of HMPV virus cases in China and beyond, including Malaysia, have resulted in a pandemic scare across the world, including in India. The virus is being compared to COVID-19, which also began in China about 4.5 years ago. The symptoms of HMPV include cough, fever, nasal congestion and wheezing. Several cases can result in bronchitis and pneumonia as well. Currently, no vaccine or effective medication against the HMPV is available. And here's a lot on how the virus spreads. An enveloped single strain of the virus can be found in many places. HMPV cases are on the rise in China, with reports showing a 45% increase in infections from 2023 to 2024. In 2024, China has seen 327 cases, up from 225 last year. The surge in cases of HMPV, a respiratory infection, can resemble a common cold. HMPV cases are in particular spiked among children aged 14 years and younger, especially in the northern provinces. Officials say respiratory infections typically peak during winter and spring, but the total number of cases this year is expected to remain lower than last year. Meanwhile, Malaysia has seen a major rise in the same HMPV cases in recent months as the virus spreads. The Health Ministry of Malaysia has recommended public health measures such as frequent hand washing, washing face, covering the face with masks and covering coughs and sneezes to reduce transmission. Meanwhile, the Indian Health Ministry also convened a meeting to take stock of the rising caseload on Saturday. Authorities, however, insist that there is no cause for concern at this time. Meanwhile, Greenland's Prime Minister Mute Egde has announced his ambition to pursue full independence from Denmark. In a powerful speech, he, who leads the pro-independence community of the People Party, argued that decades of cooperation with Denmark have failed to achieve true equality for Greenland. His call for independence comes as a response to global attention on Greenland following comments from US President-elect Donald Trump about the possibility of purchasing the Arctic territory. The Prime Minister further revealed that a draft constitution for Greenland has already been prepared, with efforts underway to create a framework for the country to become an independent state. US President-elect Donald Trump is set to be sentenced on Jan 10th in the criminal case related to hush money payments made to a porn star. A US judge indicated that while Trump has been convicted on these charges, he's unlikely to face jail time or other penalties. Take a look.
A judge has ordered Donald Trump to be sentenced on January 10th for his criminal conviction over hush money paid to a porn star, though the US president-elect is unlikely to face jail time or other penalties. Justice Juan Merchan's ruling means Trump will be required to appear at a court hearing just 10 days before his January 20th inauguration. It's an unprecedented scenario in the country's history. Before Trump, no US president, former or sitting, had been charged with or convicted of a crime. Trump can choose to attend the sentencing virtually. The judge wrote that a sentence of unconditional discharge would be the most viable solution. That means no custody, monetary fine, or probation. A Trump spokesperson said in a statement there should be no sentencing in the case, as it, quote, should have never been brought. The case stems from a $130,000 payment Trump's then lawyer made to adult film actor Stormy Daniels. The payment was for her silence before the 2016 election about a sexual encounter she said she had with Trump, who denies it. A Manhattan jury in May found Trump guilty of falsifying business records to cover up the payment. In announcing his sentencing plan, the judge denied Trump's motion to dismiss the case. Merchant said setting aside the jury's verdict would, quote, undermine the rule of law in immeasurable ways. The judge also criticized what he called Trump's unrelenting and unsubstantiated attacks against the integrity of the criminal proceeding. He said Trump's character and history relating to his public statements against the justice system were considered in deciding on his motion, saying, quote, in that vein, it does not weigh in his favor.
Well, staying with the U.S. in the wake of a tragic incident on New Year's Day where a U.S. Army veteran drove a truck into dozens of people, New Orleans is slowly beginning to return to normalcy. Despite the shock and devastation, the city is staying strong and determined as its people try to heal and move on from the tragic event.
Normalcy has begun to return to a stricken yet defiant New Orleans after a U.S. Army veteran drove a truck into dozens of New Year's Day revelers. But while music is again streaming from clubs, many people, like Antoinette Klima, are not forgetting the victims of the attack.
It's devastating. This is my child's father, and my son's 11 years old. So it's devastating to come and see what someone would do to other people, and they don't deserve it.
Klima's former partner was one of 14 people killed by the attacker, whom authorities said was inspired by Islamic State.
This is a beautiful city full of beautiful people, and unfortunately this is a tragedy that happened, and hopefully people all over the world can learn and see what this is like and not do it again somewhere else. Hopefully there's something that happens from this.
Nicknamed the Big Easy for its usually relaxed mood, the city has weathered many storms, including the catastrophic Hurricane Katrina in 2005. New Orleans native Michael Willis says he is moved by the community's resilience.
It reminds me of the year of Katrina, when everybody came together and kind of showed that we can be a community at large and come together and support each other in time of crises.
The mayor said security will remain heightened in the city ahead of the major events. That's reassuring for many local residents, like wine distributor Sean Kell.
You know, we have the Super Bowl coming, we have Mardi Gras coming, and it gets packed in here, and it does seem like it's a vulnerable target.
New Orleans' economy depends on its tourism and conference industries. The area attracted 17.8 million visitors in 2023, according to state data.
Well, meanwhile, law enforcement agencies across U.S. cities have increased security following this deadly attack in New Orleans, as well as the explosion outside a Trump hotel in Las Vegas. These incidents have raised concerns about threats during a month filled with major public events, including Donald Trump taking office. Take a look.
U.S. cities are beginning the new year on high alert following the deadly truck attack in New Orleans and the explosion outside a Trump hotel in Las Vegas. The incidents have both raised fears of more threats in a month packed with large-scale public events. In Washington, police said they have beefed up security across the city. The move comes ahead of a state funeral for former President Jimmy Carter on January 9th, as well as the inauguration for President-elect Donald Trump on January 20th. On Thursday, college football's annual Sugar Bowl in New Orleans, postponed a day by the attack, also saw heightened security. Before the game, the security perimeter around the Superdome had been expanded with water-filled barricades, and the stadium had been swept multiple times with bomb-sniffing dogs. In New York, there was enhanced security outside of Trump Tower, major train stations like Penn Station, as well as several other locations across the city. and just days before the anniversary of the January 6, 2021 attack on the U.S. Capitol, the FBI has released a new video of the unsolved pipe bomb case, seeking new leads. The suspect placed 2 pipe bombs near the Capitol the night before the attack. Police deactivated both. Despite receiving more than 600 tips and offering a $500,000 reward, the FBI has not been able to identify the suspect in its 4-year-old hunt.
Well, that's all we have for you on Morning Brief at 9, but news and updates continue right here on News9 Live, so stay tuned and thanks for watching.
From the highlands of Afghanistan to the jungles of Vietnam, the deserts of Africa, to street battles in Mosul, the AK-47 has dominated every continent. But what if it could be made even better? Enter the SSS Defense P-72, India's answer to the AK-47. So how good is it? Let's find out.
This and more. Streaming on News9 Plus. Subscribe and get free vouchers.
The section is called The Bit of the Empire Striking Back. It is not me who said it, it's Mr. Tata who said it. And normally you don't expect him to say that because he's very polite, he's very understated. But at a weak moment in the speech in Cornell, he said India's acquisition abroad made by Tata Group is kind of the empire striking back. Please understand, Mr. Ratan Tata is a very, very patriotic man, extremely nationalistic. He had the nation's interest first and everything else second.
This and more. Streaming on News9 Plus. News is now content. Subscribe and get free vouchers.
Valuations can be frothy. Going public is almost like what some of us would like to say is the holy grail, right? IPOs are a trend, not a bubble.
Do secondary markets exist? Answer is absolutely yes, and it's been around for a very long time.
Valuations could be high or low, and valuations may correct over time, but IPOs are here to stay. It is basically a graduation ceremony of sorts. It is potentially where a startup stops being a startup and starts becoming an enterprise.
The IPO space has just started in the past 24 months. The startup ecosystem has been around for 15 years.
Fundamentally, if you have a strong business and you have predictability of cash flows and you can actually give with a fair degree of confidence where the business is headed, the market will reward you.
This and more. Streaming on News9 Plus. Subscribe and get free vouchers.
India spends $75 billion on foreign